Breaking news. After the SEC finally approved multiple Ethereum ETFs, we have been patiently waiting for the big money institutions to start buying. Everyone was shocked at how quickly this happened. And now the question everyone has is, when is it going to cause a massive price surge? Well, I'm here to tell you the answer isn't as far away as you think. In fact, the smart money has already started quietly amassing huge amounts of ETH, and their S1 key indicator that will reveal when they're ready to push the price even higher. So let us go ahead and dive into what this indicator is and what it is showing us right now, because what we can see is pretty astonishing. But before we get started, make sure to hit that like button. If you want to stay up to date with the most important news in crypto, make sure to subscribe because we drop a video every single day demystifying this crypto market. Right, so first things first, on October 12th, the SEC finally announced that they would be approving several Ethereum. These include the largest being from giants like Fidelity, VanEck, and from the Grayscale. All of these have a total of around $3 billion in assets under management, or AUM. Now this was really shocking to see because everyone expected that this process was gone take much longer, but surprisingly, it only took a couple of weeks for the SEC to announce their decision. Now remember that the SEC doesn't actually mint new coins. What they're doing here is allowing companies to launch investment vehicles that hold actual ETH. So instead of launching an ETF that holds a tokenized version of Ethereum, they're allowing them to hold the real thing. Now why does this matter? Well, the theory is that because these funds hold real Ethereum, they'll actually have to interact with the network just like the rest of us. This means they'll have to pay gas fees. They'll also need to stake their Ethereum, and they might even use decentralized applications built on top of the blockchain. This is different than when the SEC approves Bitcoin. Ethereum has a lot more use cases than just being a store of value. With Ethereum, you can interact with the network by staking, transacting, and even using data. This will all bring millions of dollars worth of capital directly into the ecosystem. But before we get into how you can actually track when this starts happening, let me tell you how large these institutions are and how they've been preparing for this moment. Now, believe it or not, some of the world's largest financial institutions have been secretly positioning themselves to gobble up Ethereum when the price dips. These include heavyweights like Goldman Sachs, Morgan Stanley, and Deutsche Bank, and they've been building their war chests by purchasing a ton of ETHs through backdoor. Now, you might be wondering what I mean by backdoor ETH. Well, these are investment vehicles, like the GBTC and the ETH. These two particular ETFs don't trade exactly how you'd expect. For example, the ticker symbol GBTC represents shares of Grayscale's Bitcoin Trust, whereas ETH represents shares of the Ethereum Trust. However, the price of these two tickers doesn't accurately reflect the value of the underlying Bitcoin and Ethereum held within these trusts. What's going on here is that investors can buy shares of these trusts at a discount, then sell those shares at a premium on the open market. To illustrate this point, each share of GBTC represents 0.00087 Bitcoin. However, GBTC trades at a significant discount, meaning that one GBTC is currently worth approximately 0.0004 for Bitcoin. This suggests that there is roughly a 50% premium in the market for Bitcoin. So if I were to buy one share of GBTC, I'd be paying $18,000 for 0.00044 Bitcoin. However, if I were to purchase 0.00044 Bitcoin directly, I would only spend $9,000. This means I could make a $9,000 profit by holding on to one share of GBTC and waiting for the market to correct. The same principle applies to ETH, which trades at a 56% premium to its net asset value. So if I bought one share of ETH, I'd pay $3,200 for 0.1 Ether. But if I bought 0.1 Ether directly, it would only cost me $2,000. Meaning, I could make a $1,200 profit without doing anything else. And guess who's been taking advantage of this arbitrage opportunity? Well, major financial institutions like Goldman Sachs, Morgan Stanley, and Deutsche Bank have been scooping up discounted shares of these ETFs and holding on to them until the price surges. But you might be asking, when is this likely to happen? Well, this is where the quiet revolution comes in. Let me explain. Just after the SEC approved the Ethereum ETF, a series of mysterious transactions took place. Hundreds of millions of dollars worth of ETH was transferred between multiple wallets. Now, these transfers didn't involve any private keys or direct wallet access. Instead, they involved a little-known feature of Ethereum called the multi-signature wallet. A multi-signature wallet is a type of cryptocurrency wallet that requires multiple signatures to authorize a transaction. Typically, a multi-signature wallet requires 2 out of 3 signatures to approve a transaction, meaning that if one person holds one key, another person holds another key, and a third person holds the final key, it would take 2 out of those 3 keys to authorize any move of the funds. Why would someone do this? Well, the idea is that it allows multiple people or entities to control a single wallet. This can help mitigate the risk of theft or fraud by requiring multiple approvals for any transaction. It also ensures that no single person has complete control over the wallet, which can help prevent issues like insider trading or other forms of abuse. So what's interesting here is that multiple wallets holding hundreds of millions of dollars worth of ETH used the multi-signature wallet feature to transfer their funds. What does this indicate? Well, it's possible that these wallets are controlled by the same entity. And if that's the case, they're likely controlled by large financial institutions like pension funds, endowments, and insurance companies. Now, this isn't confirmed, but it's the best guess of many analysts, given the sheer amount of ETH being moved and the advanced techniques being used. So what does this mean? Well, it is a sign that the big money institutions are readying their war chests and getting ready to enter the market. This is similar to what happened with Bitcoin back in 2020, before the big price surge. So it's very possible that we're about to see something similar with Ethereum. And the question becomes, when will they start buying and when will the price surge begin? Well, according to data shared by the pseudonymous crypto analyst, interest in Ethereum has never been higher. In fact, he notes that since January of 2021, the number of unique addresses interacting with the network has steadily increased. This trend shows no signs of slowing down, as the total number of addresses continues to grow. To put this into perspective, over the past 12 months, the daily active address count has increased by over 40%. This level of interest indicates that more users are engaging with the Ethereum network than ever before. Another metric that supports this bullish outlook is the average daily transaction count, which has also been on a steady incline since January 2021. Since then, the average daily transaction count has jumped by nearly 60%. This increase in activity can be attributed to a variety of factors, including the growing popularity of decentralized applications built on Ethereum, the increasing number of users in the crypto space, and the overall growth of the digital asset market. Now, while these metrics are positive indicators, they don't necessarily suggest that prices are about to surge. However, they do indicate that interest in Ethereum is growing and that more users are becoming active on the network. This brings us to the final piece of the puzzle, the quiet revolution itself. A quiet revolution is underway on Ethereum as more and more users are choosing to stake the network. As a result, the amount of ETH staked has grown exponentially since January 2021, increasing by more than 700%. This trend shows no signs of slowing down as more users continue to join the network and participate in the staking process. Staking is a process where users lock up their coins to help validate transactions on the network. Staking is a key component of Ethereum's consensus mechanism, which is responsible for securing the network and ensuring its stability. The more coins that are staked, the stronger the network becomes. This increase in staking activity can be attributed to a variety of factors, including the growing popularity of decentralized finance and other applications built on the increasing number of users in the crypto space, and the overall growth of the digital asset market. This is where things get really interesting. The quiet revolution on Ethereum is a clear indication that the network is growing and maturing. More users are becoming active on the network, staking their coins and participating in the staking process. This is a positive indicator of the network's strength and stability. So when can we expect the price to surge? Well, all signs point to now. The approval of Ethereum ETFs and the quiet revolution on the network are two major developments that are likely to drive prices higher. The approval of Ethereum ETFs gives institutional investors a new way to gain exposure to the market, while the quiet revolution shows that the network is growing and maturing. Both of these factors are likely to contribute to a surge in prices in the coming weeks and months. However, it's important to note that while these indicators are positive, the price of ETH can be affected by a wide range of factors, including regulatory changes, market sentiment, and technological advancements. Therefore, it's impossible to say with certainty when or how high the prices will surge. That being said, the combination of the approval of Ethereum ETFs and the quiet revolution on the network creates a unique opportunity for investors to take advantage of potential price increases. By understanding the factors that are driving the market and staying informed about recent developments, investors can make informed decisions about when to buy and sell. If you enjoyed this video, please make sure to hit that like button and subscribe for more videos demystifying the crypto market. Thanks for watching.